Hello everyone, this is Red with RedDragonLeo.com, and today was the start of a mini crash. Tomorrow will probably be worse. I know a lot of bulls out there thinking that we're going to have a bounce. We did hit the 200 or 1200 area, 20-day moving average here on the monthly chart, but I think we're going to blow right through that. And ultimately, I think we could easily go down here to hit this 1100 before the month is out. You can clearly see this monthly chart is looking very, very ugly. You can see we're getting ready to have a cross here. We're getting ready to cross down below the 50 here. The ADX line, the red ADX line, which is the negative one, is just getting ready to turn up. And I'm sorry, the DI line, the red DI line, and then the ADX line will turn up when these two separate. When this is all said and done, into March of next year, this will probably be up here for it's all into March of next year, I suspect, as this thing continues down. But for the month, I'm not sure where it's going to bounce, but that 200-day moving average, or 200 period moving average, I'm sorry, on the monthly should be a likely target. You can clearly see this thing is getting ready to cross below the zero. And you know, last time that happened was in this territory here. You can see what happened here. We're looking quite similar, but you know, this is not even going to be the worst of it. I think the worst of it's going to be in October of this year, after the Legatus pilgrimage. So I think that is really where it's going to get ugly. But we'll see. As for now, it's already very ugly, so we'll go from there. The Arun is not even turned up, but it is a lagging indicator. So same thing here with the Arun oscillator. So all in all, it is looking like more downside is coming, and I do not think we're going to get much of a bounce tomorrow. Here's why. The weekly is still pointing down, and possibly we could end right here on the 200 moving average at 1157. That is a good target for a bounce on the weekly, and to maybe bounce it up a little bit next week to start the week off. But I don't think it'll end up that way because of where we're at on the weekly chart. Look at this. The weekly is still pointing down hard, and on the RSI, so relative strength index right now is at 36.57. that means there's only basically 36% of the strength of the index is for the bulls, and the other 63% of the strength is for the bears. It's almost a 2-to-1 ratio. When it gets below 30, it's in major bear territory. So that tells you on a weekly basis it's going to get ugly, and this is probably going to go way below this and not set up a positive divergence at all. For a positive divergence to happen, you'd have to have this lower than this, but I think the next candle, the next week, will probably be even lower. As you can clearly see, I've said in other videos, when we were going down here and we went here and we kind of went sideways, I thought we'd go up here and touch the zero line, but we never quite made it. And we rolled back over. We are still heading down. I think before this is all done, through October, maybe March of next year, somewhere in that area, this thing is going to go deep down here in the negative territory. Negative 75, negative 100, similar to this here. It's going to go deep, and it's still right now above. So, and you can see the damage it's already doing. Of course, it should have a bounce at some point, as the full stochastics will go down after a few weeks and want to curl back up and give it a little bounce. But overall, the MACDs are going to still slope downward, and so it'll still put downward pressure on the weeklies. And so if I were to guess right now on the weeklies, I'd say our bounce territory is probably right here 1150 off of this 200 moving average on the weekly. On the monthly, you can see it is 1178 for that one, but the 200 is 1102. So it could go all the way down to there before the month is out. So it is looking extremely bearish. There's no signs of it recovering yet. So no signs of it turning back up. I know that looking at the daily here, you can see it's off the charts, but it is at extreme levels. You've got the monthly pushing it down, the weekly pushed it down. That's why it's going to extreme levels right now. As you can see right now, it's just in extreme territory. Of course, we're getting ready to have the death cross here as the moving averages cross over. That'll be a few more days, next week or something maybe. And this here as the MACD, as you can see here, it's down here at -15. Still no signs of turning back up. I think what we're going to have is the crash tomorrow, and then we'll have the little bounce on Monday and Tuesday. Into Ben Bernanke's meeting and speaking, and things need to calm down over the weekend. You cannot expect that to happen tomorrow and think that you're going to have a big rally tomorrow. If you get a bounce, they're just going to short it. The bears or the bulls are trapped right now. And it's not the bears. Okay, the bears exited. And let me show you why I say that. Can you see this candle right here? This candle that closed positive yesterday, and the long bottoming tail that it put in there. This was seen by all the traders. And I don't know the exact statistical numbers on it, but I would venture to guess that 70 to probably as high as 90% of the times that you see a bottoming tail like this, it is an exhaustion move down. It is time to exit your shorts and go long for the rebound back up. Every trader seen that, both the bulls and the bears. I think the bears exited at that point when they seen that and the positive close. They're like, okay, this is a tradable bottom. I'm going to exit my shorts if I'm a bear, and we'll sit on the sidelines. And the bulls went ahead and jumped on board and went long. The selling today was not done by the bears. This was done by the bulls who got trapped yesterday. So don't think that there's going to be a bear squeeze, because I don't see that coming. I think the bears are waiting for a rally so they can get in. They're on the sidelines. They exited too early right here on this bottoming tail. Whose fault is that? Well, nobody's. That's just, part of the reading the charts. Statistically, when you got 70 to 90% of the time, somewhere in that range, that these bottoming tails work and a reversal does happen, you go with the odds. And that's what a lot of traders did. That's why a lot of the bears exited. So the only, wild card as to why it failed, in my opinion, is because there's no more free money. There's no more POMO. It's done. Sure, will they ever come up with QE3, 4, and 5? Sure, but the economy's already doomed. I covered that in the other video I did. So no amount of POMO is going to bail out the trillions and trillions of dollars that the market has, that it owes in debt. That these gangsters, these thugs, have stolen from the American people. These derivatives that they have done. So it can't be paid. It's impossible. So that's one of the reasons that this failed. This would have succeeded if POMO would have been still in the market. You would have seen the government come in and buy it first. Then the big institutions would have came on board. Then the retail traders would have come on board at the top, or at least the last leg. It would have been like an A, a B, a C move up, and you would have seen the A leg be pushed by the government. The big institutions would have sold into the B leg, and then they would have bought at the bottom of the B leg when they seen it put in a higher low, rode up the C wave, and they would have sold at the top. And about that time, the dumb money, the retail traders, would have got in at the top and said, oh, well, this is finally going higher, and that's when they sell it. At this point, the big institutions probably stepped aside, at least the ones on the inside, because they have been selling into this, and the only people that bought this were the retail traders. There's no government to buy it, no POMO to buy it, no free money buying. That's the biggest person. So if you've just got the retail trader buying this and you've got the big boys selling, it's not going anywhere. And that's exactly what happened. The bulls got trapped and they started panicking and they sold. Well, guess what? If we had a rally tomorrow up to this level, I guarantee you every bull would want to bail out. Even if it got to there halfway, that's your bail point. If they were able to get long at that point and time it perfectly. There's so many bulls on board right now from this one day. That one day, there are way more bulls, in my opinion, than there are bears. I think the bears exited right there. I mean, look at it. It's the perfect bottoming tail. There's nothing a trader could have predicted there other than if they would have seen that, hey, there's no POMO money, maybe I should just step aside and not go long, at least for a bull's point of view. let it happen, see what happened. They'd like to get short, but so I think we're going to crash tomorrow, and I think our target is at least that 1150 area, if not 1100. I don't know how long. Of course, it could go all the way down here to here. I do have a fake print from a long time back showing a 106 buy print. I don't think it's going to go there, but you don't know. It just depends on how many bulls are on board. I don't have any new fake prints, anything recent showing how many bulls are on board. And so I don't think it's going to go here. The best the bulls could really hope for is a flat day, a pause day. And that would be bulls and bears equally fighting it out. In other words, if I'm wrong and there is a bunch of bears on board and a bunch of bulls on board and they fight it out here, you might have a pause day. And if that's the case, then yeah, maybe you can see a little rally into Monday and Tuesday from that level, and that might be an exhaustion bar here. But there's no bottoming tail on this. Yes, the volume here is what you would call very high volume and an exhaustion bar. It looks like capitulation to me. The only problem I have with it is when you factor in the lack of POMO money. There's no money to buy up this rally. You throw out that money, who's going to buy it? Even if they had a capitulation day with the volume indicated right here, which you can see that these are the most of the time. This is what happens. You look back here and you see the capitulation 2 days, took 2 days, and what did you do? You bottomed right there on that day, and then you ran up. But there's POMO money here. There's POMO money been in this thing since 2009. There's none now. Zero. So even with this capitulation, who's to say there's not another bar higher tomorrow? You don't know. This normally would be an exhaustion bar in a market that you have money to buy it back and to rally it up, POMO money. But if the program traders, the computer bots, start kicking in like they probably did today, they'll just keep selling it. To what level? I don't know. I'm just giving you some support levels. But you can look at again on the weekly here, and you can, besides that level there, of course, you've got this level here. Draw this whole level over here, and of course you also have my fake print down here at 885, which is Dow 8300. Now I don't think it's going to hit that tomorrow, but I think we could easily drop, whether it's a full-blown crash or not, or whether it's just a few hundred points. I think we'd easily pop down to here to this 1150 after today. I don't see a big rally tomorrow. I think people that are bulls are wrong about this, that they're just, bulls are trapped right now. I don't see the bears being trapped. I see the bulls being trapped. This is at extreme levels, but again, look at what we're fighting against. We're fighting against a monthly chart pushing it down, a weekly chart pushed it down, and a daily chart pushing it down. It's no wonder this thing's at negative 20 right now on the MACDs with really no signs of turning up. It's just down, down, down. It just keeps putting in, it's not putting, every positive divergence failed here, and it's just not, putting it in like it's one to reverse. It's extreme levels here, but I don't see a rally tomorrow. I know some other people see it, but I don't see it. Now after tomorrow, whatever it does, if it closes flat or just crashes and closes down another 500 points or more, I think tomorrow will end this selling, and they'll be able to regroup over the weekend and come up with some reason to rally a little bit, calm things down over the weekend. You don't calm down in just an overnight session. You need the whole weekend, and then come out with something next week and something positive, and the market can calm down and do a little bit of a rally and maybe get back up 38%, or I don't know. It's pretty negative right now. It might not get to but 23.8% on the Fibonacci retracement levels from wherever it ends tomorrow, whether it ends here with a spinning top kind of pattern, or whether it ends down here 1150 or down here 1100. I don't know, but I'm just giving you some possible targets. I'm just saying I'm staying short. I'll exit my shorts probably tomorrow, regardless. So but I do not see any rally. There's no indication here that this thing is ready to rally. This thing's still going down. There's no bear flag even. There's no positive divergence. There's just nothing. Everything tells me this thing's going to continue down tomorrow. I went back and looked at the charts here for the industry here. I looked back at let's say go back to all, and these lines here and stuff. This could be a target here easily, very easily reach this target. And come on, go. And I want you to see. Oh, okay, 20-year. Let's go to 20-year. And okay, so you can see here where I've drawn these lines right here, and you can see how important this is. Back on the 20-year on the Dow, you can see it's still pointing down here and still very negative. And of course, this is on the monthly. But you can see I touch these lines, it goes there. Then there's this line here, and that's at about 8,700 or something. And I have to go all the way back. I just wanted to go back quite a bit further to show you some of this, where these lines come from. Okay, so right here you can see all the way back to, I don't know, not to the turn of the century, 1900. So we'll go here and we'll start it right here and just zoom in on this. And from this point here, that date is starting in 1982, going all the way up, and this tells you where it should go back to, before it's over with, easily. But we already know where the fake print is going to take it, which is at what I say, 3465 on the SPX, on the SPY, I'm sorry, which is probably about 3,000 in the Dow, where it's said and done, about that, I'm guessing. But you can see where this is a major trend line right here. This is on the monthly though, so it could easily pierce it and come back, you know, possibly, or just pierce right on through it and just keep right on going. That's on the monthly though. As far as the SPX, let's go to that and look at that on the SPX. And we're going to see similar lines that I drew here. I started them right here, I think at the same time period. This line was, again, 1982, going up here. You can see 790 or something maybe there for that one. This here clearly shows it could easily pop down to, what would that be, about 1160 probably, right there on that line here from this one here. I did not draw that on the Dow, but you can see where we can easily go. And so that could be our target before this is done. This is again on the monthly. Let's see, as far as, I think that just covers about everything. We could go a little shorter term, of course, and you can see that a little better, but let's go with the 1 year chart and on the daily, and you can see it's right there. It's a little over 1060, 1062. That's a possibility. That's a possibility before the month is out, that it could go down to that level. I know it sounds crazy, but you can see where the trend lines are. I mean, it's you can see we broke these two major ones going all the way back. Where'd this one go to? 2009. Both of these have now been broken, so major damage has been done. This one here went all the way back to 1994. That one is broken. This one here went all the way back to 1996. That could be the next target before the month is out. So, but again, as for tomorrow, because of those factors that I was just mentioning, which are the basically the lack of POMO money from the government, the big institutions are selling, and in my opinion, the bulls are the ones trapped right now because they went long right here at that perfect bottoming tail. You know, that was just a bull trap, and there was no POMO to drive it up. Just retailers went long, and they got clobbered as the big institutions dumped because they already know. You remember what Lindsey Williams said? The insider selling's the highest ever been. And I don't know, it's like 1,600 to 1 or something like that. It was unreal. And throughout the end of 2010 and into early 2011. So they have been unloading and unloading and unloading their own shares, and now they're dumping even more. So we still have that wild card situation with let's see here, it was the $1 billion trade. Let's see what yeah. That's funny, ACP. There is still the $1 billion trade. I posted that link somewhere. I think I just posted it right in the actual blog. Let's see here. When you go back and you look at the blog here, there was a trade for $1 billion, and maybe not, but there's a trade for $1 billion that the U.S. would default. Okay, that to me, that is an insider. He knows, whoever it is, he knows that they are going to default. The when part, I do not know. When are they going to announce that? Could they announce that tomorrow or next week, next month? I don't know. But when they announce it, the market is going to crash. It is just absolutely going to fall off a cliff. So, you know, this is not looking good. You know, so let's see here. I don't see it, but anyway, I think I covered it right here. That so anyway, I think I've covered everything. I can't think of anything else. So, you know, I don't care where it opens tomorrow. My opinion, it's going to be sold. It's just going to keep tanking. And, you know, I think tomorrow, if you got shorts, you probably decide to exit them and go to cash over the weekend. I mean, that's what I'd do. That pretty much covers my thoughts on it. Everybody else I know is thinking we're going to get a bounce. I'm thinking just the opposite. So good luck, everyone. I'll try to do some more research on the weekend to figure it out. But as of right now, it's just looking like a crash on Friday. That's what it's looking like to me. The Bulls' best hope is a flat day, a spinning top day. So that is it. I'll see you guys on the blog, and good luck.